I have a example here that has many key elements to it in recognizing which indicators work effectively for defining how we arrive at a gap up in this case. Uh, as in most cases with gaps up, there is an adequate level of supporting evidence, and it's one of those that you can look at and study, uh, or mentally just be aware of the number and types of evidence that you have. Sometimes you don't need a lot, but when you have different ones, it just the combination seems to be uh, more effective. In this particular case, we're in the stock of Pool, Pool, and it's a $120 stock, and I'm on the day when it gaps up. Now it only gaps up about $1 the next day, but for most of us, $1 is quite good. It's just in this case here, it would be rather expensive at $120 a share. But even so, this example is to show you how the gaps work. The first thing I'm going to explain is in the price chart. You may have listened to other videos that I've talked about in what we refer to as crossover divergence, sometimes cross under divergence. But what has happened here is the price red was lowest, and now on the vertical green line day, price red is at 75 and price green is at 72. So it's 3 points above it. So we have what we refer to as crossover divergence. And when that happens, that's an indicative of the next day's strong activity. Now, also, one key thing for gaps is the majority of the time when price red is going up and you think you're going to have a gap up, it's great when price red and green are going up because they usually point in the direction of the gap. That's not always true, but it happens more frequently than you might initially think. I want to go over to the pattern, the power 4 and 5 pattern over here. Zion is above orange and the power 4 are up and under orange. And so that's a divergence between Zion and the power 4. Power Zion has also crossed over on this day, has crossed over the orange line. So it's all 5 lines are up, but Zion is divergent, being above orange with the power 4 under orange. And yellow, I forgot to check yellow. Trend yellow is at minus 0.39 and trend orange is at 1.7. So yellow is still under orange. Now, also in the trend red, we have a crossover just by a hair telling us that red is over green. It's the start of an uptrend. So that's a real good indication that the next day the candle will be up. But the best thing in the trend chart is it might not be my favorite example of divergence, but it's one of the best ones. It's one that you should watch, and that is between trend red, green, and gray. When green and red are up and gray is down, you oftentimes get a strong green candle the next day. That's not necessarily a gap up situation, but the condition of, you also have trend gray in a down touch, the yellow lines and 0, if you will, looks like. Trend gray is at 1-1. So it's down touching 0, it's down touching yellow, and so that's going to be a strong reaction as well. You have the down touch, you have the divergence in gray with red and green up, gray down, and you have the pattern that qualifies with Zion in divergence above orange and the power 4 under orange. So that's what those are some of the things that constitute the gap. And over here in the power chart, as I mentioned before, this is the third reason that we strongly would identify as a gap, as this particular situation as a gap. I guess as the two key ones for me would be the Zion crossing over and the power 4 under, and of course the down touch gray with the other two going up. The gray and that's pretty important in the way of movement. And it's just they verify themselves is kind of what they do when you look at this stuff. We have zip red also that's made a significant movement. Zip red on the day before the vertical green line was at 4.8, and on the vertical green line day, zip red is at 78. So it went up 74 points. It actually is the highest line in the zip chart on the vertical green line day, and that's beneficial as well. The other factor too down here, when you have this movement with Zion up and the power 4 under and going up, always consider the power 4 crossover, the orange line. And when all four lines cross over the orange line, you get a significant green candle. Or in this case, you get a gap up candle with a medium green body, medium green size body, which results in about $1.50 at the end of the day from the previous close. So again, this is an excellent opportunity. And here again, trading after the move, you normally don't do it, but in this particular case, zip blue is lowest, and we know from our other examples that there's a real high probability that the price will go up if the zip blue is highest, and in this case it does, but keep in mind it doesn't look like it's much. It closed in this case at 121.56, and the next day it closed at 121.63. So it's nothing to brag about, but it is important from the perspective of seeing which lines work. And the biggest thing, obviously, in our gap up, on our gap up, is it was that divergence that we saw for this following day as well. I guess I should point out here, I wasn't thinking, or yeah, I was too. That was done right, because red was highest on this and lowest the day before. That's right. All right, that's so much for that particular one. I normally, recommend not trading after a gap up. Obviously, we had zip blue lowest and going up, but for the little that it went up, it really wasn't worth it. So that has been a gap up example, and there was adequate amount of supporting evidence to identify a gap up as well.